Hello, my name is Victor, and in today's video, I want to talk only about Google because we just had their Q2 earnings for 2026 and the stock is down about 9%. Let's not waste any time. We're going to jump right into analyzing what happened in the income statement for this most recent quarter. Making our way top to bottom, I can see that revenue was up 24%. Very strong mid-20s growth here for Google. Love to see that. Cost of revenue was up 17%, not too bad. Research and development up 32%. Given that Google is a tech and growth stock, that shouldn't be too much of a problem, but it is incredibly high compared to this time last year. Sales and marketing up 18%, again, not too bad. G&A matching the top line growth, also up 24% compared to this time last year. So all in all, we have income from operations up 30%. Love to see that the income from operations is higher than the top line growth. But what really caught my eye, have a look at the net income, 112 billion compared to 28 billion back in 2025 in the same quarter. That is up 297% compared to this time last year, but I do want to mention I have a little asterisk here because we're going to dive a little bit deeper and see exactly why the net income was up by so much. And I just want to pause here, and if you're enjoying the video, be sure to give me a like. It helps out the channel tremendously. And if you don't want to miss out on future videos, be sure to hit the subscribe button and turn on notifications so that you see every single time that I have a new video, which is normally Sunday evenings. And I made sure to highlight this specific line item, which is other income on the income statement, because we have almost $98 billion of other income that made its way down to the bottom line for Google in this most recent quarter. And after I did some research, I found that it was generally one-time paper gains from Google's investments. If you're curious like me, specifically those investments were in Anthropic and SpaceX. All in all, I would say it was a very decent quarter for Google, but I wanted to dive a little bit deeper and look at the breakdown of the revenue to look at one particular item, and that is going to be Google Cloud. And when I did this research, I was pleasantly surprised to find that Google Cloud is doing incredibly well compared to this time last year. In 2026, we had Google Cloud revenue of $24.7 billion compared to $13.6 billion back in 2025. That is an 82% growth compared to the same quarter in 2025. Love to see it. And this is especially the case because, as we have seen with other tech companies like Meta, like Amazon, a lot of these companies are investing heavily into AI, but are not seeing any kinds of returns on it yet anyway. But Google is looking like the exception because we can already see Google Cloud is growing incredibly strong. We might be looking at a hat trick hero worth of growth. For those of you who are new, I consider a hat trick hero anything growing over 100%. But we might be seeing this Google Cloud growth exponentially growing here over the next couple of quarters or the next couple of years. And seeing Google Cloud growing as fast as it is incredibly exciting for me as an investor in Google, but I do want to mention the negative here in this earnings report because it is not all sunshine and rainbows for Google, as evidenced by, again, the stock being down almost 9% in the last week. Because as I made my way through this most recent earnings report, I found something that completely shook me to the core, and that is that Google has negative free cash flow in Q2 of 2026. Free cash flow was down, in the red, in brackets, in parentheses, however you want to note that this is not in the positive, because negative $5.8 billion was the amount of negative free cash flow for Google in this most recent quarter. And I just want to highlight how important this is because Google has never in its history had negative free cash flow. And I hate to be the bearer of bad news, but I'm here to ask the question, is it only going to get worse? That is because as I was listening to the earnings call, it wasn't surprising, but I was just so incredibly disappointed to hear that Google is going to be increasing their CapEx spend for the full year of 2026. Originally, Google had mentioned that they are going to be spending about $180 billion to $190 billion for CapEx spend throughout 2026. We're just going to call that $185 billion at the midpoint. Now, though, they have increased that range throughout the full year of 2026 to $195 billion to $205 billion. So $200 billion at the midpoint. And that is incredibly concerning for me as an investor because free cash flow is already negative. How much worse can this possibly get for the next quarter, 2 quarters, even through 2027? And I'm raising this flag here because these companies, and Google is no exception, cannot just keep increasing CapEx spend through infinity. There has to be a breaking point where either the CEO or the board of directors or the stock just collapses so much to a point where somebody has to hit the brakes and say, okay, we are going to be decreasing, or at the very least, just maintaining CapEx spend for the foreseeable future. And probably what was even more concerning for me with Google, if I don't already sound concerned enough, is that when I did a PE analysis for the stock, I found that a trailing PE for Google currently is 16. The forward PE ratio for Google in my research is a 22. What does that mean? Well, with a higher PE ratio into the future, that means that earnings are expected to drop through the end of 2027. And if you want my opinion and my honest thoughts when it comes to Google and really all of these big tech companies here in the middle of 2026, I've never been in a situation in my almost decade of investing in the stock market where I've had so many companies just with complete reckless abandonment of their free cash flow, of their debts, of their shares outstanding, and I ultimately had to break it down between short-term and long-term thinking. Because in the short term, yes, there are a lot of concerns when it comes to not only Google, but all of these other tech companies. Specifically when it comes to CapEx spend just continually increasing, and as we've seen now, that is going to start affecting free cash flow. With negative free cash flow, Google is eventually going to have to start either diluting shareholder base, or they're going to have to start taking on debt for all of the CapEx spend. Something that I don't want to see in Google, because one of the main reasons that I got into the stock is because of how amazing a company it is when it comes to their balance sheet, being able to manage debts, and growing that top line. Now, when it comes to the long term, specifically with Google, because they're really the only company that is seeing returns on investment when it comes to AI, at the very least, Google Cloud grew by 82% over this past year. So that is incredibly exciting as an investor in the company. As for what I am doing with Google in my personal portfolio, I am going to keep my vision towards the long term. And I'm talking like 5 to 7 years out, because the next 2 to 3 years, I'm expecting not just Google, but all of the big tech companies that are spending like drunken sailors to go down in price, because as we have seen with Google, as the first one up here with earnings, CapEx spend is going up, earnings per share is expected to decrease over 2027, and free cash flow is negative. I do not expect Google to be the only one in this situation through the end of 2026. And that's unfortunate to say, because most of my personal portfolio is in big tech. But honestly, this might create a buying opportunity for somebody like myself that wants to build up these tech positions through the next 5 to 10 years. I would love to know what you think about Google and their most recent earnings in the comments below. Are you concerned with a negative free cash flow for the first time in Google's history? Or do you think that the CEO, board of directors, and everybody knows more than we do when it comes to AI? And are they able to justify that CapEx spend here over the next 3 to 5 years? I'm personally expecting a bumpy ride, but again, I would love to know what you think. If you made it until this point in the video, be sure to give me a like. It helps out tremendously. And as always, I'll catch you in the next one. Peace.